Thank you for joining us in our Webinar Wednesday series. We're coming to you live from downtown Washington, D.C. Our webinars are every Wednesday, and you can find the upcoming schedule on our website. Past webinars and all recordings are also on our website and our YouTube channel, along with over 160 other recordings on federal contracting topics. All are complimentary. If you have questions for our speaker today, you can email him directly at the contact information you'll see on the last slide. Right, this is just a little bit about us. We are a Washington, D.C.-based firm and provide services for federal contractors. This ranges from market analysis reports to proposal writing and also post-award compliance. More information is on our website, so please visit us there. We do offer advertising in our newsletter, so please feel free to reach out if you'd like more information on that. All right, our speaker today is Christopher Shiplett, and he's going to be covering SBA 8A requirements and timing. Thank you for joining us today, Chris, and I'm going to go ahead and hand it over to you.
Thank you. Welcome, everybody. Good afternoon for this, I think, last Wednesday before the holiday season. Thanks for joining us. I'm going to talk today about SBA 8A requirements and SBA 8A timing. I will tell you it's an incredibly complex subject. We're really only going to touch on the surface of it here in the about 15 to 20 minutes that we have. Before we dive in, a little bit about me and my firm. My name's Chris Shiplett. I'm a lawyer with Randolph Law. We are a government contracts specialist law firm, with an emphasis on small to medium-sized businesses, in particular on these set-aside programs like SBA 8A, woman-owned small business, HUBZone small business, that type of thing. We handle really soup to nuts for our clients, everything from contracts and teaming agreements to bid protests to helping folks get their 8A and other set-aside designations. So really kind of anything a government contractor would need, particularly a small set-aside government contractor, we try to help out because it is a very complicated and confusing world out there, as you will see in this presentation. So today's topic is the SBA 8A requirements. Let's go ahead to the next slide. And I'm going to talk at a very high level here. What is the SBA 8A program? So it's a program that I think was begun in the early 80s for minority-owned small businesses. It is definitely I think it's the largest, maybe veteran-owned is larger, but it's certainly the most well-known of the federal government set-aside programs. And the federal government sets aside contracts. What I mean by a set-aside program is federal government sets aside contracts for what are designated as small businesses that are socially or economically disadvantaged, woman-owned, veteran-owned. 8A is minority-owned. It is a little more complicated than just minority-owned, but we'll get into that. So what does that mean? Well, you go and you file your application, you submit thousands of pages of documentation, and you and your company become registered as an 8A program. And what does that get you? Well, number one is it gets you a limited pool of competition. You're competing only against other 8A programs for certain contracts that the federal government has designated as set-aside contracts. Number two, you get the opportunity to pitch yourself for set-aside contracts of up to $4 million, although it's also $7 million for manufacturing entities. And we're actually going to talk about that in our 1:30 Wednesday webinar, the sole source process. And then the agencies really push to have to meet a regulatorily designated minimum percentage of contracting that the federal government must do with these set-aside companies, specifically with 8A companies, which also means there's a lot of subcontracting opportunities where you're contracting with a prime contractor, but what is helping you get that contract is your 8A designation. So with that in mind, go ahead to the next slide. Let's talk about what the process is to get your 8A. Now you have to comply with all the criteria, which we'll talk about in a couple more slides. You have to demonstrate to the SBA that you meet all of the requirements for the 8A program. But if you go through kind of their pre-checklist and you see that you feel like you meet all the requirements, then you go through the process. And that process is you apply through the SBA portal. You provide a huge number of documents, all of your corporate documents, all of your financial records for the past 3 years, personal financial records, fingerprints, contracts, invoices, internal documents like HR records and stuff like that. SBA looks at it. SBA comes back typically, in my experience, with probably 4 to 5 different rounds of questions. Some of those questions being, hey, we didn't see this document, or we don't understand what this document means. Others of these questions being, hey, we're concerned about this particular aspect of your application. You need to answer all those questions, submit any additional documents, and all of that happens through this online portal. I want to say the online portal is about a year old. Before that, you had to submit physically. And then at the end of the process, ultimately, you're either approved or disapproved for 8A status. Let's go ahead and go to the next slide. In terms of timing and how it works, everybody, I think it's east of the Mississippi, although I guess since we're on an online system, it doesn't matter as much. But previously to the online system, everybody east of the Mississippi sent their applications to King of Prussia, Pennsylvania. Everybody west of the Mississippi sent their applications to the SBA location at the Presidio in San Francisco. A SBA specialist reviews the applications, and as I described before, they have a back and forth question and answer process whereby they evaluate your application. They ask you questions about specifics. It can get highly, highly detailed about the qualification requirements that we're going to get into shortly. If you answer all of the questions to the satisfaction of the specialist and they are comfortable that you should be approved for an 8A, and that typically will take maybe 7 to 8 months. I mean, it really takes quite a while. Then they will send your application to Washington, D.C. for a final review. Washington, D.C., the Washington, D.C. SBA office is another level of review of the application, in my experience. They almost never reject it once it's gotten there because the regional center specialists review pretty thoroughly. I have had 1 or 2 applications that I've helped out with rejected at Washington after being sent to Washington. But in those cases, there were weaknesses in the application that we were aware of in the beginning. But anyway, it goes to the regional center. You're going back and forth with the specialist about your documentation, about your bona fides, about your qualifications. After about 7 or 8 months, it gets sent to Washington, D.C. And if you are approved, which usually happens if you get sent to Washington, D.C., you then get your 8A certification. I would say the whole process expected to take about a year. So with that in mind, in terms of how and the what for, let's go to the next slide and we'll talk about what the requirements are. And they are very clearly laid out. Go ahead to the next slide. They are very clearly laid out in the CFR, the Code of Federal Regulations, but there are nuances to them. So we'll kind of walk through them generally. You have to demonstrate that you are economically and socially disadvantaged. Some portions of, or some of the indicia of economic disadvantagedness are that your net worth is $250,000 or less, that your AGI 3-year average is $250,000 or less, that you have $4 million or less in assets, that you are of good character, that you demonstrate an ability to perform successfully, and that you're a small business, as the SBA defines that. Now, each of these seems fairly straightforward. They are all very, very loaded. Let's go ahead to the next slide. So there are 2 types of social disadvantage. One type is that you are a member of a defined group, and there are 6 defined groups in the statute and in the code. You can see the defined groups there: subcontinent, Asian American, Native American, Asian Pacific Islander, African American, Hispanic American, or Native Hawaiian. The most common way to demonstrate that you are a member of one of these defined groups is that you submit your application paperwork. You check the group that you are a part of, and you submit a picture and you submit your name. And oftentimes the SBA, with your self-certification and membership, plus your picture plus your name won't have an issue with a claim of a membership in a socially disadvantaged group. There are some nuances to this. The first one I'll point out is number 2, Native American. It is not enough to claim that you are Native American. You have to be a member, meaning an enrolled member according to the enrollment procedures of the tribe, and the tribe that you are a member of has to be federally recognized. So I know certainly here in Virginia, where my firm is, there are at least 3 or 4 state-recognized Native American Indian tribes that are not federally recognized. Another situation I ran into once was there's a Native American and First Nations tribe. It's on the border of New York and Ontario, and it's federally recognized in Canada, but only state recognized in the United States. And unfortunately, that is not sufficient. Being a member of that tribe was not sufficient for this particular client to have this social disadvantage basis. Other things that come up sometimes, Hispanic American, that is of either of really Iberian descent, and so that means either Spanish or Portuguese descent. One note is that oftentimes you have to demonstrate, and this particularly comes up with Hispanic American, that you were raised in a Hispanic culture. So, for example, I had a client who was adopted by a stepfather who had an Anglo last name. And this particular client had difficulty demonstrating that she was of Hispanic American descent. She had to send in a declaration that she spoke Spanish at home, and that essentially she had grown up in Hispanic American culture. But so that's one way, is to demonstrate that you're socially disadvantaged, is to be a member of a defined group. Then the other way, if we go ahead to the next slide, the other way to demonstrate social disadvantage is if you're not a member of a defined group, that you demonstrate that, essentially you demonstrate an affirmative social disadvantage. And what this means is a sort of an observable characteristic, and that characteristic led to social and economic disadvantage. Well, what does that mean? Well, I would say the most common one I see is a woman-owned business with a woman who's not otherwise a member of one of the defined groups on the previous slide, where that woman can demonstrate because of her gender that she was, I don't want to say was discriminated against, because that's not the statutory language, but that she was denied social and economic opportunities. And we've helped several construction companies that are woman-owned get their 8A on that basis. And what you have to do as the owner in that case, is essentially write a declaration or a narrative that describes how your observable characteristic leads to this social disadvantage. And certainly for the woman-owned businesses in the construction field, the women owners were able to demonstrate that as a result of their gender, they had less opportunities in their chosen field than their male compatriots and that type of thing. A note, though, is that if you're not a member of a defined group, that the characteristic has to be readily observable. So we've had a couple clients that had a diagnosed mental illness or a mental disability, but because that's not an observable characteristic, they weren't able to get 8A. However, we have simultaneously had several disabled veterans who were able to prove that they had a disability. They had the paperwork from the military, and as a result of, and then demonstrate that their disability led to social and economic disadvantage, and they were not otherwise a member of a defined group, they were able to get their 8As. So I think the overarching point of this is that it is very nuanced. Certainly, if you are a member of one of the defined groups on the previous slides, it's much more straightforward to demonstrate your qualifications for the 8A program. Next slide, please. The next criteria is that you have to demonstrate economic disadvantage. And again, just like everything else, this seems very straightforward, but it's not as straightforward as it seems. You have to have less than $250,000 in income. That's averaged over the prior 3 years. You have to have less than $4 million in assets, and you have less than $250,000 in net worth. Well, what does that mean? Well, the less than $250,000 in income is your AGI from your taxes. If you are married, your spouse's income will count if your spouse is either involved in the business or has provided the business some benefit, like your spouse gave the business a loan. Your spouse's income will not count if your spouse is not involved in the business, but you have to prove that. It is AGI, so in a lot of cases there are some, tax breaks that come off of your AGI. It's also averaged over the last 3 years. Same thing with the less than $4 million in assets and the less than $250,000 in net worth. The $4 million in assets doesn't count your primary residence. It doesn't count your the value of the business itself, but if you own a second business, it counts the value of that second business, and it doesn't count the value of any asset accounts that are not immediately available without penalty. And that's a very long-winded way of saying generally retirement accounts, but not all retirement accounts, because if you are over a certain age, and I think the age is 55, but I'm not certain, I think maybe it's 65, if you're at an age where you're able to withdraw money from a retirement account without penalty, then the value of that retirement account is going to come into consideration under your assets. And that same calculation works for your net worth. The big thing that I see with the assets and the net worth is if you have a second home or if you have a second business, the full value minus the mortgage of that second home and the full value of that second business becomes your assets or net worth for the purpose of economic disadvantage. Something I see less often is like brokerage accounts or cash accounts. And there are ways to properly set yourself. You have a little bit of flexibility in how you can set yourself up, but not much, but a little bit of flexibility if you're kind of right on the border in how to arrange your affairs to allow yourself to be eligible without running afoul of the regulations. So that's economic disadvantage. Again, kind of three basic things, but underneath it, they are much more complicated than they seem. Let's go ahead to the next slide. Next one is potential for success. And this one is also more complicated than it seems. This one also is actually what I see quite a bit of this being the problem with 8A applications. You have to be full-time devoted to the business. And so for a lot of people, actually, let's talk through all these. You have full-time devoted to the business, positive cash flow, not more than 70% income from a single source, and you have to have a positive revenue for more than 2 years. What happens with a lot of people is they start their business and they want to immediately get their 8A. You can't do that because many times when you first start your business, you might not be full-time devoted. You might become a consultant for your prior boss, and you might be half-time and then half-time on their payroll. You might not have positive cash flow for a while. You might have only one customer. Now, my personal opinion is that this is an artifact of perhaps a time when businesses were less service-oriented and more manufacturing-oriented, because for a lot of businesses in the modern world, it's difficult, even after you've been established for a few years, to have less than 70% of your income come from a single source. But all of these is an issue, and SBA will look at this. There are some ways, for example, no more than 70% income from a single source. You can certainly explain that depending on your circumstances. A great example I have is a construction company that we got an 8A for that really only had one project a year, which meant that for that particular year, 100% of their income was from a single source. But we were able to demonstrate that they had, if you averaged it over the prior years plus their expectation for the coming years, they didn't have just one client. It was just that the jobs that they took as regards the size of the jobs that they took compared to the size of the company were huge. So they would end up really with 100% of their income for a particular year from a single source. Next slide. Next one is also one I see tripping folks up a lot. You have to demonstrate ownership and control. Ownership's usually pretty easy. You just have to be a 51% owner, or you have to be a majority owner. 51% is the most common. The more difficult one is control. And control means you have to be in day-to-day control of the business operations. I've seen this negatively affect folks in a couple ways. Number one is actually the second and the third slide, documentation and affiliation with a prior employer. A lot of new 8As, particularly in the service industries that we help out with, start as consultants, so their employer subleases them some space. They work for their prior employer. You know, maybe the prior employer loans them a little money or gives them a little help in other ways, and that then the SBA takes as negative control of the company, meaning you're affiliated with the prior owner. The prior owner has actual control of the company, or excuse me, the prior employer. The other one I see is this prior family 8A connections, a immediate family of a prior 8A, so children and parents cannot themselves own an 8A. And then the third thing I see a lot of times is control in perhaps larger companies that are a little bit more established. You know, sometimes the SBA misses the concept that the owner doesn't sign every single document. So I've seen it in construction companies where you have project managers or field estimators, they're signing contracts, SBA questions that, and you have to explain kind of the hierarchy and that type of thing. So ownership and control is a big thing. Next slide is also a big thing and a deceptively big thing, good moral character. Now, these are all fairly straightforward. You have to explain prior criminal convictions, tax obligations, defaults on loans, and bankruptcies. The most difficult part is this complete truthfulness on the SBA application, and let me give you a negative example. I had a client come to me because the SBA said he had lied on his application because he had not disclosed that he had a brother, and he had not disclosed that his brother owned an 8A company. He did not know that his brother owned an 8A company because he and his brother had had a falling out 20 years before, and he hadn't spoken to his brother in 20 years. Turns out his brother owned an 8A company. Because he hadn't disclosed the 8A company that he didn't know about on his 8A application, he was deemed not to have good moral character, and he was denied an 8A. The good moral character piece of it is deceptively the most difficult piece of it, because if you are denied for good moral character, if you're denied for any other reason, there's an internal SBA process to appeal that denial. If you're denied for lacking good moral character, there is no internal SBA process for appealing it. You have to go to federal court. What that typically means is if you're doing it yourself, you go from $0 of external fees to $50,000 to appeal it, which is simply unachievable for most folks. So what I tell folks is, if there's something that the SBA is skeptical, well, first off, in your initial application, you not just don't lie, that's a basic, right? But also double and triple check and explain anything that you might think that the SBA might have a question about. And then the same thing in any responses to the SBA, really over-explain your thinking behind taking certain business steps so that to ensure that the SBA doesn't get this suggestion that they think that you are not of good moral character. Next slide, which is our final slide, well, our second and final slide. So all of those are the criteria for being registered as an 8A business. As I said before, you submit it through the online portal. You go back and forth with the business analyst about it. If ultimately you pass that stage, the business analyst sends it to DC, and after a while, often up to a year total, you receive a great little letter from the SBA that says, congratulations, you are approved to participate in the 8A program. The very next thing that will happen is SBA will ask you to submit a business plan. Like everything else federal government related and federal contracting, if you have your own business plan, excuse me, that won't necessarily comply with what the SBA is looking for, so oftentimes you'll have to rewrite it into the SBA's form. It's a 9-year program. You have to recertify your eligibility annually, which is not as complex a process as the initial certification, but is in and of itself a fairly complex process. There are continuing program requirements which are outside the scope of this discussion in terms of maintaining your control and what percentage of your work over the course of 9 years is SBA-related work. But you gain access to the SBA program. You also gain access, and I'll kind of leave you with this, to a dedicated SBA, they call them a BOS, Business Opportunity Specialist, or SBA rep, which often can be very valuable in addition to everything else that's valuable. So that is the entirety. We can go to the next slide. That is the entirety of the half-hour explanation of the SBA 8A requirements and process. Thank you all for joining us. Our next one immediately after this is going to be about the SBA sole source set-asides. The SBA program, 8A program, is, I think, extremely valuable to companies that truly qualify and to companies who are able to take advantage of it on the other side of qualification. We see quite a few companies that don't. We see quite a few companies that do. Thank you all for your time. I hope that this has been valuable to you.
Thank you, Chris, for joining us today. If you have any questions, please reach out to him via the email or phone number shown on your screen. And this concludes the webinar. Thank you.